Good morning, this is Robin Bieber on ChartTalk on the 3rd of July at 6:55 in the morning London time. The chart in front of us is Aug RBOB and I think it holds all the clues to the next leg. Let's just recap. Over the last 2 to 3 days the market has been in springboard condition. This is when the market is in a range condition and is using the congested short-term moving averages as support to run up to range resistance, which we've seen perfectly on this contract, RBOB here, up to 125.71 for example, and on the rest of the contracts. Absolutely perfect springboard conditions. The market is now trying to move from springboard back to reignite the uptrend, and the uptrend is likely to be at a slightly different angle of ascent than what we've just seen, a more gentle one. However, that is not confirmed, the move from springboard to uptrend yet, although it's threatening. And the key is, A, the short-term moving average is holding, which they've done perfectly for the last 3 days. The stochastics have moved positive, but we need to move over 125.71 on RBOB, and then 126.80. 125.71 was closed over yesterday with a close at 125.92. Not quite conclusive enough, but a move and close over 126.80 would deliver the market into the hands of the bulls and indicate a reigniting of the uptrend and higher numbers, probably up to 131 on RBOB's case. The breakout north or the re-emerging uptrend is not green lighted until RBOB gets over 126.80. That is the pivotal resistance on the board today. Over 125.71, and we're printing 124.30, over 125.71 would be the clue that this is about to be, that 126.80 is about to be threatened. A move and close over there gives us upside. So long as RBOB doesn't close back below 123.59.48 area, the upside is still maintained, but we need these triggers at 125.71 and 126.80 to be pulled. And so watch RBOB at the resistance 125.71, 126.80, and the short-term moving average supports, but particularly the initial support pivot at 123.59 to 48. So long as it stays over that level, the market is threatening to change from springboard to uptrend. And that change is dangerous, particularly when we're moving into the gap zone left by the 6th to the 9th of March on the crudes and RBOB. In other words, we're entering a dangerous condition where the market is really going to be tested as to whether it has the resolve to punch higher. Now, moving on to WTI, it needs to close over 40.69 to have upside. If it closes over 40.69, this recent high here, it's a virtual shoe-in for a move to 41.05.25, but a move over 41.25 and confirmed by a close would suggest that WTI is joining in RBOB by being when it's over 126.80 and the uptrend is reignited. The short-term moving average is a very good support where there is likely to be buying emerging. The 5-day may not hold, but it's got good support lower down to 39.35, 39.46 area where the 8 and 13-day moving average come in. Brent has done pretty well, but it really needs to hold over 42.45. If it doesn't, it's not critical. It just means that the momentum is going, and actually the odds are that 42.45 will be breached early this morning, and then it's down to the short-term moving averages, all the way down to the 8 and 13s around 41.82 to 69. They could easily be tested. A move and close back over 42.45 or staying over 42.45 suggests a test of 43.48, and if 43.48 is breached, we're moving into the uptrend and looking for the gap to be filled around 45.18. In other words, there's upside. Heating oil is doing pretty well. It's trying hard to hold this 122.59 level. It's just printed 122.46. If this fails, then look for a dip back to the 5-day moving average around 120.30. In other words, something like 200-point dip, which we could easily get. But a move and close over 122.59, which was the springboard target, would give us some upside, at least to 128.66, and be evidence that the uptrend is kicking in. Gas oil looks like testing here on the left-hand side here, the CP at 369 to 369.25. It's had a high at 366 already. If it punches above there, then the next target would be 379, and that could well occur, but we need to get over 369 and a quarter for this to happen. The message today is that the market is trying to move from springboard condition where we're in a range and testing range resistances into a re-emerging uptrend. The clue will be firstly the action on RBOB at 125.71 and if over there at 126.80. The uptrend is not re-emerging unless we can close over 126.80 on gasoline. The markets are showing promise, but we need good closes to confirm it. And those good closes would be, for example, RBOB punching over 40.69 and preferably getting over 41.20, Brent getting over 43.48, heating oil holding 22.59 and running up to 124.25, and gas oil getting over 3.69. The stage is set for a pirouette north, but we now need the contracts to dance to the right tune. And if we look at the structure for a moment, the deck red deck looks good, still holding above the short-term moving average. Stochastic gone positive. We'll borrow the arrow here. There you go. Stochastic positive. Should head to minus 46. Deck red deck holding above the moving averages, pretty much a microcosm of flat price, should make its way to 152. Both the deck red decks on TI and Brent are looking toppy for the morning. In other words, I would expect both these to wobble and dip a bit this morning, as I am expecting the flat price. Brent 60-minute to the two stochastics are looking negative, so don't be surprised by an early morning or a morning dip on both RBOB and Brent. We're already doing a bit of that already. We've already, if you like, begun the dip. I'm not convinced it's got a long way to go down, but don't be surprised by a little bit of a dip this morning, and then look for the resistance to be challenged later. That's all for today, folks. Good luck, good trading, and bon appetit.